So what's happening with the real estate market since it's been 6 months into the year? Let's jump into what is actually occurring. I'm Brendan. I'm the data focused realtor. Let's jump into not only the last 6 months, but also June's numbers. First of all, let's talk about a reality check. The good news, housing is normalizing after 2 years of the unicorn craziness, right? We are finally seeing back to normal trends, which is fantastic because that gives us certainty. Because we are also returning the normal seasonability for summertime, right? We're seeing this increase. A lot of sellers have come into the market, and a lot of buyers have also come to the market. That is a wonderful sign. And prices are continuing to rebound. Since the beginning of this year, we've only seen prices go where? Up by $50,000, by the way. So we're going to talk about that more because it's mind-blowing. The reality check, homeowners, you still have limited options between rates and inventory. Your new listings are still declining, and affordability remains a primary challenge. Obviously, higher rates, and it's still expensive. So what's the outlook? The new construction, that continues to grow. We see that, right? We see a lot of these new builds continuing to release the product, and they're offering more options for buyers and sellers. Now expect a moderately active summer season, and we saw that actually in June. We're going to talk about that just in a moment. But here's something really cool. This proves exactly what I mentioned last month, right? This data here, this shows us that prices are stabilizing. So you can see a trend right, if you pause this, right where you see the 2021 downward trend there, and then it goes up in 2023. I just messed that up. I meant to say 2022, right? Now it goes up 2023, which is the green section here. So we've continued to have increased prices. Now, what about the percent change in home values? Again, we can see if you go back July through December or January through 2023, you see that we've had that negative home value change. But since then, we've continued to have our home values continue to increase. All of the data aligns from all of these different sources that homes continue to get more expensive, even in the Austin metro area. All right, so here we have a quote. If I were trying to make a case that the decline in home prices that began in June 2022 had definitely ended in January 2023, April's data would bolster my argument. So all the data actually that we see in the last 6 months has continued to prove this. All right, what are the mid-year takeaways? Good news, buyers are active as the housing market is starting to continue to normalize. So we've seen a consistent trend of that 6.5 to 7% interest rate. So in addition to that, prices, of course, are rebounding, which we'll talk about more. The reality check is affordability remains a challenge, and homeowners have limited options. And the outlook, new construction, again, continues to grow, and our new construction builders are offering continued lower rates as incentives to bring you in. But with rebounding prices, homeowners are still ready to move and are in a solid position because buyers can still take advantage of this slight buyer's market. Let's talk about June numbers here specifically in Austin. So the average days to sell, this is pretty unique. So we started in February at 71 days. It was 55 days for the average days to sell. So we see a continued decline in meaning homes are selling faster. Okay. New listings, there's a 3% decline. So we look year over year. This makes sense, right? Because last year was kind of crazy with the amount of new listings that came on the market. Now we're only at 4,671 new listings. So there is less options coming to the table. 99% close price to list price ratio, meaning, hey, if I wanted 400,000, did I get 400,000? The answer is no. The sellers are still getting a little bit below where they're originally listed at. The median list price, this is also interesting. If you see in parentheses, there's a trend, that number increases and grows, right? Now, May is the one little exception here, but what you see is we've increased to 515,000 on the list price. So again, an upward trend of where list prices are going. Median close price, the same thing here. We see a continued from February increase in the numbers of the close price at 475,000. So prices are getting more expensive. when you close on the home and when the homes are listed. Now, look to the active listings to sold listings. We see there are many more active listings. Right now, there are 1,816 more active listings than pre-pandemic. And sold listings, it looks like we have had an increase of 448 versus pre-pandemic. And months of inventory were about the 3.5 months. So we've been hovering about 3.1, 3.5 months to select from. That's still relatively low. And in normal, like in other markets, they would say this would be a seller's market because inventory is so incredibly low. But right now, in this interesting market that we're in, it is still a buyer's market. Okay, sellers, I'm talking about you first because this is a little bit more important information and new information. So in June, the number of sold homes were lower than expected. And it's unusual for summer because normally for June, we continue to see increase in the amount of sold properties and sold listings. But that just didn't happen in June. We had in May increase and then June decrease. So that's likely due to the debt limit, people going on vacation, and the 7% spike in interest rate. So we came from 6.3% to 7%. And that was due to Congress's issue, again, with possibly not passing the debt limit, and really scared a lot of buyers into waiting. And that was the end of May and all through the first 2 weeks of June. This clearly had an impact on the data. Now, also, if you're between the 1 million to 3 million price point as a seller, wow, you have a lot more competition versus pre-pandemic. Normally, we see about 600 homes that are in this price point pre-pandemic. Today, we're 1,000 more active on the market than normal, than pre-pandemic. And you have just a lot more competition that you are competing against, which also means you're going to be longer on the market for days on market. In addition, sold values, this is the good news, continues to increase. Since January, we're up $50,000. And I know it says since 2022. I intended to put 2023, mixing up the years here, but it is in fact 50,000 since the beginning of this year of 6 months. Buyers, you still have the negotiation power, 60% to 40% ratio. So sellers, as much as you're going to want to take control and get what you want, right now, buyers are going to have that control. You do have a lot more inventory, which again means more competition, and it still takes a little bit longer to sell versus more pre-pandemic times. And getting a fair price is a humongous win. So if you were trying to be a little greedy, we're going to sit on the market. If the condition isn't great, it's going to sit on the market. Okay, buyers, let's talk about you. The average price continues to increase. We just mentioned that. Sound like a kind of broken record now, but since last month, so when you compare from May to June, there was an increase of $22,000 in the average price. That's a lot. So for people who continue to think, I'm going to wait because prices are going to go ahead and drop a lot, that's just not what the data shows. Now, a little asterisk here, fourth quarter of 2023, should we expect values to slightly decrease? The answer is yes. Well, why? Because that's a season, right? So we have these ups and downs with the flows throughout wintertime. And wintertime, naturally, we have a little bit of a dip. And then again, January, we start to go up. So should we expect values to slightly dip? Yes. Will they dip to where we were December of last year? No, absolutely not. The data doesn't show that. I'm not a fortune teller, but the data doesn't show that. Rates, they did reduce since even a few weeks ago from 7 to 7.5 to 6.75%. Why? Because we just had the not the job market, of course, is what spiked it, jobs report, but we just had the report for inflation, which decreased. That means interest rates then decreased. The available inventory, it's there for now. And sellers, they may pay for closing costs. That depends on the realtor who knows their negotiation skills. Only the great is able to negotiate all closing costs to be paid for by the seller. The median close price is $60,000 lower compared to June of 2022. So this is true. When you look at June of last year to June of this year, it's the closed price is 60,000 less. So you're still getting a good deal compared to last year because it's at least realistic. But again, compared to January of 2023, values have increased and recovered about $50,000. So lastly, despite higher interest rates, again, prices keep going up. If you have questions about what we went over, you're just starting as a home buyer trying to learn about this, or you're a past client and you're like, hey, I kind of want to know what my value is. Again, I'm disputing my property taxes. I'm here for you. All right, I'll see you in a month. Take care.